having and sticking to a true long term perspective is the closest you can come to possessing an investing superpower, says hedge fund manager Cliff Asness. Hey folks, hope you're doing well. Liquid here, and I have to agree with Cliff's assessment. On any given day, the stock market is like a coin toss. It could move up or it could just as easily move down. But if you hold on to your stocks for just 3 months, an interesting pattern starts to emerge. This graph shows the rolling quarter returns of the stock market, and notice how there are more positive occurrences than negative ones. The pattern becomes even more apparent with a 1 year holding period. And if we look at a 5 year holding period, you can see there's a lot more positives than negatives. And at 10 years, there's almost no losses, except for this one part during the Great Recession. And here's a 20-year rolling return going back all the way past 100 years ago. And you can see how there has never been a loss, even during the Great Depression. The lowest 20-year return during this whole time is still positive 3%. And that's why marathon runners are usually great investors, because they're committed to the long run. And here's why having a long term mindset can get you through market volatility and downturns. It's because you're able to see those pullbacks as opportunities to buy discounted investments and accelerate your goals rather than panic and sell. If you don't need the money anytime soon, then why not leave it and allow your money to continue compounding? That's why you don't need to be smart or gifted or spend any time reading earnings reports to win in the markets. All you need to have is patience. So that kind of got me thinking, what other financial superpowers can you develop? How about the ability to control your ego? Once your basic needs are met and you're living at a relatively comfortable level, any additional spending will mainly be driven by a desire to have a higher social status. Larry Page is the co founder of Google, and he's worth like billions and billions of dollars. But he doesn't eat better food or drive a better car than you. Maybe occasionally he eats something more theatrical and takes longer to prepare, but that's not necessarily more delicious or more nutritional than what you're having for dinner today. Maybe sometimes he can ride in a slightly more comfortable seat than other modern cars, but he still has to wait in traffic like everyone else. The problem with climbing social ladders is that in order to climb up, you have to push other people down. So it's a zero sum game. The desire to always be on top is why so many people make a relatively high income but have very little to show for it. The degree to which you can maximize the gap between your income level and your ego is your ability to delay gratification. And of course, there's always a balance you have to find for yourself, but generally, the more you can delay consumption into the future, the more you can save in the present, and in the sooner you'll be able to retire. The focus on saving can often be misplaced because people look towards their spending habits or they look for extra ways to make money. And of course, all of these are important aspects to consider as well. But the ego is the center of financial behavior. Ego drives the fear of missing out when we see our friends buy a bigger house than us. Ego makes us sensitive to how other people will perceive us. And it also contributes to lifestyle inflation by convincing us that somehow we should adopt more expensive desires simply because we're making more money. There are often times where spending more money does make life easier, but other times it's simply for the prestige or the optics. A simple test is to just ask yourself, would you still want to spend the money on something if no one else in the world knew about it? The person who makes $500,000 a year is no further ahead financially than others making $50,000 if he doesn't learn to save any money. That's why controlling your ego is one of the most underrated skills you can have to improving your financial well being. For some people, their house will never be big enough, their cars will never be fast enough, and the parties they throw will never be elaborate enough. But if you already know what you want and you're content and satisfied with what you have, then you are truly a wealthy person. And finally, developing the ability to enjoy being slightly uncomfortable may be another superpower as well. When asked if they are nervous to perform, the top athletes would often reply no, but they would feel excited instead. Both these emotions suggest uncertainty lies ahead. It's just that being nervous indicates something bad might happen, whereas being excited proposes something good to look forward to. The science actually says that feeling anxiety and nervousness are psychologically almost the same as feeling excitement. All these feelings produce an elevated heart rate and makes you sweat and maybe give you a feeling of butterflies in your stomach. And people perform better when they're feeling good than when they're feeling bad. The trick is apparently to just change the way you conceptualize the feeling. In a 2013 study, participants were made to deliver an impromptu speech about themselves. Before they spoke, half of them were reassured that nervousness and a faster heart rate were positive signs that their bodies were preparing to take action and perform. The other half didn't get this message, and in the end, those who were told about the upside of their nerves were less distracted by them. Again, it all starts with the mind. Learning can be uncomfortable because you have to stretch your mind in ways that it's not used to. But if you want to access new tools to improve your finances, you need to have a bias to continuous learning. The more knowledge you accumulate, the more opportunities you'll be able to recognize and capture as they come to you. So, when framed in that way, learning can be fun and a positive experience. Making a higher income could be as simple as just asking your boss for a raise. And this can be nerve wracking, of course. But if you approach the situation from the perspective of increasing your value to the company and maximizing your career growth, then maybe that uncomfortable conversation you have with your boss would be less difficult and more exciting. And when it comes to business and investing, what's comfortable is rarely what's profitable. The world is uncertain, of course, it's always changing, so financial markets are uncertain as well. But you can learn to navigate uncertainty and get better at it over time. You can never totally remove risk from your portfolio, but you can learn ways to manage that uncertainty. And one example, like I've mentioned, is to just have a long term perspective. So, if you have the ability to fully embrace being uncomfortable, then you will never stop growing as an investor and as a person. And that's why, if financial superpowers did exist, I would definitely vote these three as top contenders. Do you think there are other superpowers you would add to the list? You can put your ideas in the comments below. Actually, I'm going to include one more bonus superpower, and I think that's the ability to avoid costly financial mistakes and disasters. It's much easier to stay out of credit card debt altogether than to pay off a large balance. And nobody gets out of bankruptcy faster than the person who avoided it in the first place. When it comes to your money, you don't actually need to make a lot of great decisions. You just have to not make big mistakes over a long period of time to reach your goals. Anyway, thanks a lot for watching. Happy investing, and I'll talk to you in the next one.